Welcome aboard, ladies and gentlemen. My name is Matthew Buckley. My call sign is Whiz, and we'll get to that in a couple seconds, but extremely fired up, again, to have Investor Inspiration invite Top Gun Options to present. As our previous speaker said, just a full day of 500-pound heads. So thanks again, Renee, for setting this up. Let's go ahead and get airborne. At the end of the day, folks, and Renee gave you a little bit of my background, trading is a form of combat. And I don't say that easily, having buried 11 of America's finest during my 15 years in the United States Navy. But it is. At the end of the day, there's a winner and there's a loser. And at Top Gun Options, I plan on being on the right side of that trade. And who's going to say that? You are, not only me, by the end of this presentation and our time together here. So completely fired up to be here, and we're going to have a blast. Matthew Buckley, call sign Whiz. You can call me Whiz in the chat box going forward. Flew the F-18 Hornet for 15 years for the United States Navy. Graduated from the Navy Fighter Weapons School, which many of you know as Top Gun. And I was also a bad guy at Top Gun. If you ever watched the movie, remember Chester and the other guy, you know, the commanding officer in the XO, the bad guy pilots. Not only did I go to Top Gun, I was hand-selected to be one of the bad guys. So if you look at the top of that pyramid of naval aviation, there's a decimal point in front of the amount of guys that get to do that. I also flew 44 combat sorties over southern Iraq. But when I was a young aviator at Naval Air Station Lemoore in California in the early 90s, I taught myself how to trade equity options. And I applied everything that you're going to learn today from me. And when you become a member here at Top Gun Options, I took it from the cockpit to the trading pit. And eventually, over the years, I popped up on the radar of one of the largest volatility arbitrage firms in the United States, headquartered right there in the Chicago Board of Trade. You see, this is the intersection of Jackson and LaSalle, those big vertical windows, Peak 6 Investments. Volatility arbitrage, big Harvard word, right, or Wharton Trading School. Well, if you can buy cheeseburgers over down here at the end of the block for $1 and somebody's selling them here for $1.10, there's an arbitrage opportunity, right? Why don't you buy the cheap burgers and go sell them over on the other corner for $1.05? That's vol arb, and that's the best way to trade options. Got to be honest with you, I felt like Valentine in Trading Places. You know, two rich white people betting $1 on me, and it turns out they both lost. So when I went up there as a managing director of strategy, essentially their XO, right, their executive officer, and after that got boring, they asked me to stand up a media company, and I was the founder and CEO of the Options News Network. Went from 0 to 80,000 users in a year, from 0 to $25 million company in a year. At the same time, I was helping build the retail brokerage known as Options House, which was my sister company at the time. Enough about me. Who cares? Let's get airborne. Action-packed. You better have a pen and paper like the guy in front of me said. We've been airborne for 7 years. We train, we don't educate. If you're getting any education today, you're a fool. Training gives you a skill. Doctors are trained. Fighter pilots are trained. Plumbers are trained, right? How many of you have said, well, plumbing's easy. Plumbers do it. Really? And then you probably flooded your house. We will train you at TGO. And we've been doing this for 7 years for, I think, over 10,000 people. I got to do the math. All experience levels. Everything's combat tested and proven on Wall Street that I'm going to cover today, and you've never seen anything like this before, I guarantee you. We utilize the demo-do methodology. We're going to demonstrate in our live trading sessions throughout the week, and then you go do. Demo-do. I'm going to brief you how to do a loop in the briefing room. I'm going to get airborne in our 2-seat Hornet, and in the back seat, do the loop, and then I'm going to shake the stick and say, you got the controls, now you do the loop. You don't learn by saying, hey, this is a call, this is a put, and then getting airdropped into Afghanistan with a rifle saying march in this direction. You'll get wiped out, okay? Here's our performance, since a lot of people say, great, love it, sounds good so far. How'd you do in 2016? 2016, I made some career calls that you're going to hear about in a little bit. Maybe through the media you've heard about some of my career calls here. Our best year since getting airborne in 2010. Here's the average hedge fund, folks, in 2016. If you think you're missing out with the rich people and, ooh, I need to be in a hedge fund, look at their returns last year, 6.2%, and that's data from about 2,500 hedge funds. Their best year in the past 5 years was 11%. The primary live trade brief portfolio that I manage was up 125% return on risk. That's $188,000. This is based on a $100,000 initial model portfolio. The urgent alert and weekly options model portfolio, 106% return on risk, about 121 grand. And then finally, the accelerated retirement. I call this my embarrassing portfolio. How embarrassing that you know, this portfolio is my worst. 101% return on risk, for about $1, $100,000 return there. That's pretty cool, folks. How many of you wouldn't mind having a retirement portfolio with a potentially 101% return on risk, right? Yeah, raise your hand. We absolutely lose some battles. If you come to these things and the guy just sits there and tells you about all the winning trades and they print money, click that little X on the upper right and go light your money on fire on the table. It'll be more fun, and have a glass of wine. We absolutely lose some battles, man, but the objective is then to win the war. Many of you are shocked to learn that a professional trader such as myself wants to win about other professional traders. The average is about 60% of the time. I know a lot of retail folks are sitting there going, what are you high, Whiz? I want to win on every trade. You can't. And with that type of mentality, you're not implementing the 3 words on the top left of that slide: discipline, risk management, and that superior execution. If you're swinging for the fences on every plate appearance, folks, you might put a couple out of the park. You're going to strike out more often than not. I personally have a 74% win rate on my trades because over time, I know that we will knock it out of the park, okay? Losing trades happen. The Rumsfeld, right? The unknown unknowns. He had a famous quote that said, hey, there are known knowns, right? Things we know. There are known unknowns, meaning there are things we know we don't know. And then the famous last line was, but then there's the unknown unknowns. The things we don't know, we don't know. Here's a perfect example. Monday afternoon, we do our weekly options live trade brief. It's about 30 minutes. I put out 1 or 2 weekly options trades. Put on one Monday an SPX bull put spread that made $1,600 in 3.5 days on about $4,500 or $5,000 in risk. I digress. One week, Monday, put on a Google weekly options trade, an iron condor. It was channeling. It was looking great. My strategic mindset, commit criteria, things are perfect. Market closes, I do my ritual, run upstairs, hop on the treadmill, start working out. I watch Comedy Central sometimes, folks, CNBC, and of course on the treadmill. CNBC announces Google has changed its name to Alphabet, and the stock is up, 5% after hours. I'm like, okay, that's great. I just lost $5 in the blink of an eye. Those happen, folks. But they happen very few and far between. If you knew that Google was going to stupidly change its name to Alphabet, I know nobody who calls it that, you'd probably be in jail for insider trading. So those type of things happen, but if you do all the intel planning you can minimize those type of blowout trades. So of course, the attorney in me says, get a slide in there that says, you suck sometimes. You learn from it. You debrief why you lost on that trade, you incorporate those lessons learned in your execution, and you get better, and you see triple-digit returns in your portfolio. Here's a perfect example. Greg Thompson, one of our members. Whiz, I took my $4,900 profit on FXI, long call diagonal, on the first day you said to close. Nice advice. This was a month and a half ago, folks, when Trump and China started getting in a tweet versus, trade war, maybe even a hot war over Taiwan, maybe even a hot war on one of their ships their naval ships pulling up one next to our U.S. naval service ships and stealing our underwater drone. I said, folks, I am very, very long-term bullish on China, but guess what? We need to bail right now, and maybe we'll reattack. We were doing great on the trade, got out, and then all of a sudden, if you look at a chart of FXI after the holy crap moment, it's back up to where I said bail, and we're going to get long China. And I'm long China again because, folks, if you say anything about Trump, he's a negotiator. You come in at your opening position, this is it, this is the way it's going to be, and you end up at the 50-yard line. You're a horrible negotiator, and you'll lose a lot of deals if that's your opening position, you stay there, and you don't meet at the 50. I guarantee you the Chinese are going to meet at the 50. They're not that stupid, okay? So here we go. Here's our methodology, and it's not rocket surgery. And I think everybody, if you move your chat box thing over, there's a little black camera thing. You can take screenshots as I go instead of furiously scribbling notes. Here's our methodology. Take a screenshot of these, and you're going to want to take some more screenshots as I go. SOT, strategic, operational, tactical. My brain isn't that big, so I stole or borrowed a lot of this from the United States Navy, right? Here's what I'm going to do. I'm going to break you from being the average retail trader, which doesn't do any of what I'm going to teach you. You're very tactical. You wake up, you put on your bunny slippers, you take a sip of coffee here, which was a good excuse for me to do it. You put on Comedy Central, CNBC, and you go, wow, that guy's pretty good looking, nice suit, good hair. He's talking about Tesla. I don't know anything about Tesla, but he says get long. Great. And a week and a half later, you're broke. Makes no sense to do that. And the stock might have imploded because of something that wasn't even related to that. Trump accidentally drunk tweets, hey, the bombers are airborne, like Ronald Reagan, and the world ends in 15 minutes. So you have to do this, a strategic, operational, and tactical methodology. In my live trade briefs, which you can get a 2-week test flight when I'm done squawking at you, for 15 minutes, I'm going to give you a strategic brief. What's going on in China? What's going on in Europe? What's going down in Latin America? What's going on with oil? What's going on militarily around the world? Iran, a Saudi corvette got USS Cold the other day. It was supposed to be meant for a U.S. frigate. Could you imagine how the market would react if here we have another USS Cole attack, U.S. ship listing to port, big hole in the side, lots of dead sailors. I brief you on all these threats out there because you have to be ready to react to them, or hopefully, and I'll also teach you this at TGO, you have hedges on. Okay, when volatility spiked earlier on this immigration thing, I said our VXX bullish double vertical made $1,500 in about 2 days. I said, let's get out of it. People are like, whoa, the volatility is going to continue. I'm like, no, it's not. This immigration stuff will be old news in about 3 hours. I was wrong. It took about 6 to 8 hours until the libs flamed out on that and then got airborne on another Trump whatever. So you need to know what's going on, folks. You need to have situational awareness, and I'm going to brief you on it. After I give you a strategic brief for about 15 minutes, we get operational. What's operational mean? United States. What did Janet say on Wednesday? What's industrial production look like? How's earnings look? What's the Fed going to do as far as interest rates? What's coming out of the daily president meetings with all these CEOs? Then we talk domestically, right? What's going on in the U.S.? So now you're starting to get a feel of how it's like to be an admiral or a general, getting briefed by a young lieutenant. Ma'am, sir, this is what's going on globally. This is what's going on operationally. Now we can talk about the battles and we can talk about individual trades. Many of you you swim upstream, folks. You actually try and swim up this pyramid and fit whatever trade you have on into some sort of convoluted Ouija board of why I'm in it. And you're wrong, period. Trust me, I've been in your shoes. I was a self-taught retail trader, folks. I told you when I was flying Hornets, I started trading stocks and found out about options, and I never traded a stock ever again. So trading is a form of combat, and if you apply the things that I learned, and I remember one of these webinars was like, Whiz, I've never been in the military. I obviously can't trade with you guys. Folks, it's the Navy. I literally had a guy in my flight school class whose first flight was from like University of Wisconsin to flight school. Wow, this is an airplane. This is great. 6 months later, he's a Hornet pilot. So that's, and I also had a guy who flew Lear jets for a couple of years and wanted to fly jets for the Navy, and he ended up flying helicopters because he couldn't, recage his brain to how to fly for the Navy correctly. So you don't need to know anything about the military to apply these methodologies, okay? I'm an acronym guy. Write this acronym down, take a screenshot, because these are the areas that I'm either trading in, investing in, hedging against, or are going to move the market in 2017. Now it says to fear 2017. I don't. We crushed it in 2016, mainly because of the T into fear, and it's going to continue into 2017. I think those slides are hidden. Hold on one second. Let me unhide these slides because they are must brief. So you're supposed to pre-flight your damn slides with. I thought I unhid those. Okay, so here we go. This is a career call for me, folks. Top Gun Options was the only financial training firm in the industry to predict this. Trump. We were the only one. Jeffrey Gunlock at Double Line Capital, who manages $95 billion, so I'm pretty honored to be in that audience, and I think a handful of other hedge fund traders. I've done my research. We are the only one in the financial training industry to have made this call. Matter of fact, Citigroup, the day before the election, said Clinton's going to win, and oh, by the way, if Trump wins, the market's going down 5%. I said they're wrong. They are absolutely wrong. Trump will win, and the market will go up 5 to 10%. And my portfolios were rigged that way throughout the fall, and we absolutely crushed it, folks, and I will show you. How did I know that? First of all, if you believe everything you see on TV, you deserve to lose what you lost if you thought Clinton was going to win and the market was, it's awful, folks. As a speaker, I speak on the side. I just got back from Jacksonville, where I'm speaking to one of the largest auto dealers in the state. I've literally flown around the United States and around the globe talking to companies, giving keynotes. I talked to CEOs. I talked to frontline salespeople. All last year at cocktail parties after the keynote's over, hey, great keynote, Whiz. They looked to their left, looked to their right, and whispered to me like, hey, I'm voting for Trump. I'm like, why? They look like they were afraid someone was going to hit them in the head with a shovel. And what type of person answers the phone at 10:30 at night to answer a poll about who you're going to vote for, right? I knew they were lying to us. I knew the man was going to win, and I knew Wall Street was behind him, and I knew Wall Street would have a rip-your-face-off rally when he won. Who would be better for Wall Street? A guy who lives 3 blocks from Wall Street, or a continuation of the Obama policies? This was a career call for me, and you should see, we had a JP Morgan trade I closed around that. It was a Jan 17 trade. When I closed it, it was about a $35,000 gain in 15 months. Okay, all these financial stocks I told you to get long before the election. Let me show you. I think I have some of my members' trades that they emailed me in. When I recommended Goldman Sachs and said, I knew that if Trump won, he's got to pull people from Goldman Sachs onto his cabinet, into his senior staff. There are 4 people, 2 cabinet and 2 senior advisors from Goldman Sachs with the guy. Now you have a put option underneath Goldman Sachs, folks. We also nailed the Brexit. Everybody remember that? Well, actually, Wiz, I think you got that wrong. I did. I flipped a coin. I thought they'd leave. The Brits, in my gut, I'm like, they're probably going to leave. The Brits are they're an island anyway. They really don't like the rest of Europe. But the polls, when it down to the wire, I'm like, people probably get nervous. I don't know. The way I traded the Brexit, though, wasn't they were going to stay or go. It was volatility. We traded bullish double verticals on vol going into it, and as soon as the vote happened, what happened? Vol gets crushed. We printed money trading the VXX around the Brexit, even though I was wrong. Also, the Fed meeting in here. We traded the Fed meeting. We traded all this stuff, folks, and it's been probably the highlight of my career for the past 6 months. And it's funny because one of my members wrote in our forum on our website, our member site, like, hey, Wiz, hey, man, you okay? This was during the fall. He's pretty, dour. I don't know if that's the right word. I'm like, I'm pretty bummed at everything that's coming out of the TV because I know we're right. And the folks that listened, one of my members, I think it's on one of these slides, is up, here it is up 111 grand on the 20 gold. I did 5 contracts, little me. He did 20, he's up $111,000 on my Goldman Sachs trade. The O into fear is oil, okay? If remember this time last year, December and January, oil imploded below 30. Oh my God, cats and dogs living together. Where are we? Who cares about oil now? Well, I do. Oil does tend to make a drive-by shooting of the market and push us up or down. So we got to keep an eye on oil in 2017. The F into fear is the Fed. Janet yawned this week and we got nothing. We'll probably see 2 to 3 interest rate increases this year. Why do we care about interest rates rising? Write this down. When interest rates are high, stocks will die. When interest rates are low, stocks will grow. Okay? Well, is that true for all stocks, Wiz? Nope. The financials. Again, I said, not only is Trump going to win and Wall Street's going to have a rip-your-face-off rally, when Trump wins, interest rates are going to go up. He's going to reduce financial regulation, and you see the Goldman Sachs is up $10 today because Steve Mnuchin, who I've had dinner with, was a partner with my sister at Dune Capital. My sister runs Dune Capital in New York, and they ran it together. All disclosure. He's going to rip Frankendot apart, folks. The financials have been in a jack-in-the-box for 5 years under Barack Hussein Obama, and they're popping. And if you think they're overvalued now, you're wrong. We're going to look at a Goldman Sachs trade today because they're going higher. Goldman Sachs is a $300, $400 stock in a year to 2 years, period. Financials are going to have a rip-your-face-off rally. They already have, but they're going to have more. Here's the order. Here's my Olympic picks. Goldman Sachs is the gold medal winner. JP Morgan, a nice silver medalist. Jamie Dimon's at the White House. Jamie Dimon was Trump's first phone call to be Treasury Secretary. Steve Mnuchin was not. And he said no. I think he jokingly said, I might run for president. And by the way, the pay is not enough. And Morgan Stanley is the bronze medalist. They're starting to, the little engine that could-ish, but I have positions on Goldman and JP. Look at this real quick. This is 2 to 3 weeks old, guys. I haven't updated this, and Goldman is up $10 since this slide, so go figure. You ready? Wiz, I'm up 110% on Goldman's 111 grand. Mike, Chuck, Whiz, I'm up 16 on Goldman Sachs in 2 months. Al, hey, 6 grand on a contract, folks. One contract, the guy made 6 grand. Mike, 20 contracts. Back when you first proposed this trade, that was a September-October time frame. Chuck, up 3 contracts, 16 grand. Look over here, though, folks. Where's Diane? Diane's up 36 grand. Harry's up 60, and Fuego's up 10,700 bucks. Folks, this is old. Look at the financials today. I got to update this slide. And look at little old Whiz. When I finally got filled on my Goldman Sachs trade, I was still recommending it in December. I'm going to recommend it today, and we're going to look at a trade. My trade, I didn't update the slides because I've been trading all morning. I'm up about 6 grand, and I'll show you it live in about a month since I put it on in December, a month and a half since I put it in December. Anybody like making 6 grand in a month? This is phenomenal. These are screenshots or testimonials. They're the real names. Those are members. Those are people. The E into fear is Europe. The Brexit. It's a coming again. It wasn't a big deal. It's not going to be a big deal. I really don't care. Earnings. Earnings are a big E in the to fear. We're in a mixed earnings season. Amazon got obliterated. Who cares? If the guy doesn't care about profit, versus revenue, why should I? He's going to have aircraft carriers in the sky in a couple years. I'm going to say, hey, I need some, I need some more chamomile tea. Enter, and a little drone's going to fly out, knock on the door, and give it to us. He's buying the Cleveland airport, essentially, folks, to make a Louisville and Memphis, a FedEx and a UPS hub. So the earnings have been mixed. Facebook, Apple did great. The Goldman Sachs, JP Morgan printed money. We're seeing some lukewarm, but the areas that I'm targeting are doing great. The A into fear is Asia. Gave you a little China brief. I keep an eye on Japan and Bank of Japan, Governor Kuroda, but I'm more keeping an eye on China. And finally, this one's going to drive some of you crazy, absolutely crazy. Why? I am long-term bullish on Russia. Now, I like to use this analogy. Here, this is my old squadron mug, actually. Here's my wings, my call sign, and that's the Hunters VFA 201 out of Naval Air Station Fort Worth. So I wear 2 suits at Top Gun Options. Not physically, mentally. Wearing my flight suit, this trade makes my skin crawl. You're bullish on Russia, Whiz? The guy was a KGB colonel when you were an aviator in the Navy. You and him could have met in an alley and gotten into a knife fight, and I would have killed him. Yeah, this trade makes my skin crawl. But I'm not wearing my flight suit right now. I'm wearing a $6,000 Armani like Gordon Gekko. I don't have that. I don't care. I don't care if he invaded Crimea. I don't care if he invaded eastern Ukraine. I don't care if he shot down a civilian airliner. Trump likes the dude. Oil's coming back up. And Putin, you got to be bullish on a guy that's going to do whatever the hell he wants to do. That sounds like a pretty shitty strategic mindset, excuse my French, doesn't it? But I don't care, man. So this is one of those, I call them hold your nose trades, okay? I'm trading the RSX. The 2 best trades that CNBC picked last year for investors, and when they debriefed 2016, were 2 positions we've been in for 2 years, 3 years. Russia, RSX, and Brazil, the EWZ. We've been in both those, and it's great to see CNBC at the end of 2016 say, hey, these 2 ETFs destroyed it. They did. I don't like the Russia trade, but I do. Does that make sense? Now, there's a 7-step trade plan that we have here at TGO. I have 0 time to go through this. Why? Because I want to get in the market and show you a live trade brief. A demo do. Everybody remember? A little bit of foreshadowing, right? 7-step trade plan. Take a screenshot with your little camera icon at the top of the thing. If you can't see it, your chat box may be in the way. You might have to move it. Take a screenshot because I'm going to go through this live in the market. The first thing you need to, and this is worth the price of admission. What was the price of admission, Renee? It was free, Whiz. Exactly. So it's a hell of a worth more than free. A lot of you, when I travel around the world, people are like, oh, Whiz, I trade. What do you trade? Blah. I hear these guys talk and they say, I need a trade plan, and then they never give me one. Well, here you go. This is my gift to you. And again, folks, yo soy unfrozen caveman, right? I'm not, some super genius here. So I took kind of out of the flying over Iraq missions, I took Wall Street, and here's a great trade plan. The first thing you need to come up with is your strategic mindset. What the hell does that mean, Wiz? What are you? Are you bullish? Do you think this Trump rally is going to continue, or are you bearish? Man, this thing's over at ski tips. The guy's a lunatic. We're going to implode. Are you volatile? Meaning, not you personally, but do you think we're just going to be all over the place going sideways? Or are you neutral? Meaning we're just going to trade sideways and not super volatile. You have to know what you are first. Step one is the win the war in Iraq, win the war against terrorism, whatever it is. Okay. Now in step two, let's come up with our target based on our strategic mindset. Well, today, strategic mindset, I'm cautiously bullish over on the overall market, but I am extremely bullish on the financials, and specifically step two, my target is going to be Goldman Sachs today. Commit criteria. Commit criteria. This is what I call your elevator pitch. Any of you ever been in sales, you know that you need to have your elevator pitch, man. What is that? 30th floor, you and I get in the elevator. By the ground floor, you better have convinced me why you're committing capital to this Goldman Sachs trade. You need to sell me in 3 to 5 sentences, man, go. If you can't look at every position in your portfolio and spit out 3 to 5 sentences as to why you're committing your capital on that trade, why are you in it? And I pin people down, and I don't do it to be mean or play, hey, stump the chump. I do it to prove a point. People are like, oh, Whiz, I'm in Apple, but why? I like Apple. Why? Then they search, well, I have an iPhone, not good enough. And I keep peppering them until they kind of string together a couple of sentences, and I go, there you go, man. Did you have that before you put 10 grand at risk? No. Commit criteria, very, very important. Commit criteria in Goldman Sachs, I'll give it to you in a couple minutes. Then we come up with the tactic. And if you learn nothing from me today, which will be very professionally disheartening to me, there's no such thing as an options strategy. No offense to anybody who speaks to you again today or has spoken before me, they're wrong. There's no such thing as an options strategy. It's a tactic. Think about this. A strategy in the financial world is what? Whiz, I need to save for my kids' college. I need to save for retirement, Whiz. Short-term income generation, Whiz, I want to buy a boat. Managing risk. Those are 50,000-foot objectives. Those are strategic objectives. You know what tactics do? They support a strategy. An iron condor, a bull put spread, a long call diagonal with a protective put that I'm going to do right now is the tactic. And I probably saw a couple thousand light bulbs just pop. Don't ever call it an option strategy again. Blow away some of the instructors or wherever you end up and tell them that. Step 5 is how are we going to employ this? All right, Whiz, you just said it's a long call diagonal with a protective put. How do we put this thing on, man? I'm going to show you. Then we're going to talk about the mid-course guidance. And 7, the exit plan. Ladies and gentlemen, I've never dropped a bomb in anger or placed a trade and closed my eyes and said, oh man, I hope that bomb hits where it's supposed to. We ain't Russia flying over Syria, folks. Carpet bombing people. We want to put that thing through a window plus or minus 2 seconds. Okay? And I want to win on my trade. So what's the guidance if as during the time of flight of this trade, what if something starts happening, man? That's bad. Also, what if something starts happening that's good? I also bump into people on the road. They're like, Whiz, I'm in this Google trade. It's up 120%. I bought, whatever, the calls. I'm like, that's great. Why aren't you closing it? What are you talking about? It's up 130%. What if it's down 130% tomorrow? Because Eric Schmidt, turns out he's a Nazi or something. I'm joking. And the stock's down, $50 tomorrow. And they look at me and the color runs out of your face. When are you taking profits? Pigs get slaughtered. In our credit spreads at Top Gun Options, if there's a 7 or an 8 in front of that profit, meaning a 70%, 80%-ish, get the hell out. I got out of our SPX weekly options bull put spread. We put it on Tuesday. I got out Wednesday for $1,200. It was a 75% gain, $1,200 in a day. Could I have sat on it and made a full $1,600 by Friday? Yeah. And with Whiz's luck, Thursday night we get a drunk Trump tweet, and the market would have imploded this morning. So in our mid-course guidance, we talk about what we're going to do when something bad happens and then when we're going to exit. When are we going to get out of this thing for max profit or minimum loss? Okay? Where am I here? 12:15. Man, you think I do this for a living. Now I got about 45 minutes to give you a live trade brief and put on a Goldman Sachs long call diagonal with a protective put. Sound good? I'm going to show you my trading cockpit. That is my real cockpit of the FA18C. That's the business end. The only thing that you can see is above, this little calculator pad at the top is the HUD, the heads-up display where I'm looking out of the cockpit. So that's brings a tear to my eye. Okay, here we go. Strategic brief. Strategic, operational, and then we're going to get tactical. Everybody having a good time? Give me a hell yeah if you like anything that I've said so far. Give me a hell yeah in the chat box. And if you're not allowed to curse because your parents are in the room, don't. Good. Excellent. Hey, man, this is awesome. All right. Strategically, skip Europe, skip Latin America. There is some stuff going on. It's not going to impact what I'm going to tell you today. But China, this one worried me today. This headline right here. Good. Got more than a couple of hell yes. That's great. Thank you. Awesome, Chris. And some names I can't pronounce. China suffers largest capital outflow on record in 2016. It's about to get worse. So to me, looking at my portfolio here with my FXI positions, all right, I got the wrong portfolio up. Give me a sec. Before I close this portfolio, look at this JP Morgan trade, folks. This JP Morgan trade is up $24,000. Pause for effect. JP Morgan's up $2.30 today. This trade's been on about 7 or 8 months. 7 months, 8 months, I forget. I don't have my notes. This trade has been on for about 2 months, and it's up 4,800 bucks. Love, love, love my JP Morgan, man. Anybody want to make 20, potentially 24 grand in 8 months? 9 months? What's that? 20, averaging over $2,000 a month in this trade. But that's the wrong portfolio. That's the urgent alert portfolio. You can get access to that. Actually, you can get access to all of our portfolios, to be honest with you. But let me go to the primary live trade brief. I want to get in here because I want to show you China positions. FXI. Write those 3 letters down. Foxtrot, India, X-ray. The FXI is the iShares China ETF, and I want to show you. I want to brief you on it because when I've briefed it in my live trade briefs, the thing has done exactly what I've said. And my call sign is Whiz, folks, and it has nothing to do with intelligence. It's a 10 beer minimum, and then maybe you get a demonstration. But my call sign isn't Nostradamus, so I'm not sitting here saying, I knew, but when you use your brain, things aren't hard. I got to tell you, man, over the years, and again, running a multi-billion-dollar firm in Chicago, I used to see people pushing option software or this or that. It was the biggest Ponzi scheme and fish oil crap in the world. The only trading software you need or anything, is a brokerage platform and the 6, 7, whatever inches of gray matter between your ears. Anybody tells you you need anything else than that, they're lying to you. But look at the FXI, China, real quickly. And let me go up 3 months so we can get the election in there. So a little bit more. Let's go out to November so you can see all right, so there's the election. Yay, he won. Whoa, he's talking some smack to us, and we're down. Right, I'm not going to say I said get out here. Right in between, you see that gap right there? That's when I sent out one of my alerts and said, you know what, FXI, it's getting ugly here. Here's you know what? The guy might not be that crazy, and we're going to level off until we hear something else out of him. Kind of looks like the Starship Enterprise. I nailed this strategic mindset, folks. Euphoria over the election, a little bit of a holding pattern. Is this guy going to target us? And he did. It's been all quiet. He's busy beating the hell out of everybody else. He might come out and beat the hell out of China again, or he might soften his position and say, hey, let's make a deal. Don't know. You got to become a member to find out. All right, so China, keeping my eye on that, but let's get operational. I'm going to focus operationally because I have limited time to put on this trade. First of all, the jobs report today, smoking. ADP jobs report on Wednesday, blistering. This, blistering. Great. Awesome jobs report. All right, Whiz, I think I've seen you on a couple other webinars. You say the jobs lately has sucked. Yes. You ready? And I'm going to, Zero Hedge has said it better than me. While in recent months, we had documented that job growth was mostly where? Waiters, waitresses, bartenders, hotel staff. Folks, and I don't bemoan those jobs, man. I've done most of those except the hotel staff part. I've mowed lawns. I've done, trust me, I worked my way through college, folks. I worked at a convenience store in Florida, Little Champ, on the weekends. That does a lot for your college. But they've been Obama jobs, man. This is the first jobs report where we saw growth in all sectors. Construction, man. Leisure and hospitality, financial activities used to be down here. This jobs report was epic. And I ain't saying that, and let's be totally clear. I am no dyed-in-the-wool Trump supporter. I think the guy's an idiot for browbeating companies into staying in and creating jobs here. Whoa, man, I thought you were, listen to me. You don't browbeat companies to stay. This is America, damn it. You make the conditions right. Lower the corporate tax rate. Allow us to bring back Apple's $250 billion in a pub in County Cork, Ireland. Lower the regulations, gut Frankendodd, and then I'll stay. So don't, you know, let me make that clear. When the guy's an idiot, I'm going to tell you he's an idiot, and he's being an idiot with demanding that jobs stay here. You make it a nice environment, but I digress. But at least he's doing what he said, okay? So here we go. This is the guy I had dinner with, Steve Kahn. Doesn't he look like Ari Fleischer? I swear to God, every time he's interviewed, everybody remembered the press secretary from Bush administration I gave a keynote with one time. He looks exactly like Ari. That's Steve Kahn, a Goldman Sachs alumni, and he's going to undo Frankendodd. That's what I call it. It's like a Frankenstein of financial law. There are entire floors in Chicago dedicated to compliance departments of this law. Now, it's going to suck if those people get clipped, but at the end of the day, hey man, Gordon Gekko, okay? So, not that I don't care about people getting clipped, but I care about my members making money too. That's where I am. Look at this headline. Trump reforms are stuff of banker dreams. This is the Wall Street Journal, folks. This is the paper of record. When I got on the train in Naperville, the western suburb of Chicago, I didn't see a face. Everybody's face was buried in the Wall Street Journal. You seeing this, folks, it should tell you that it's an all clear for the financial stocks as well. Amazon, I would use this pullback. I sent out a trade today to my urgent alert folks. I said you get a text alert within. I follow up with an email alert with a screenshot of the trade, and then you get the recording of my live trade brief. But I sent out an alert on the XLK today, and I lied about my Goldman Sachs trade being up $6,000 in a month. It's up $7,300 in a month and a half. $6,000, Whiz, come on, extra $1,300 I might drink this weekend. But why the XLK? First of all, it's hard to get bullish on Amazon out to January 19. I have the capital to do it. I think I can buy a contract. So we're going to get back into some bull put spreads. This is way oversold. It's some profit taking. The thing is disgusting and prints money. Facebook we're long, and those are crushing it, and so is our Apple position. So really, really good for tech. I don't even think, it's funny, week to week, people move Amazon around. Is it a tech stock, a consumer staples? Is it a this? I don't care what it is. They generally group it as one of the FANGs, right? Facebook, Amazon, Apple, Netflix, and Google. So I guess it's in with those guys. But, okay. Just checking out my time and making sure that wasn't, I get my hedge fund buddies texting me throughout the day, so I want to talk about stuff. We got to talk about vol. I don't have time to talk about vol. However, with you guys, sign up for a 2-week trial. We'll talk vol until we're blue in the face. We were at 10-year lows on the VIX, folks, the other day. Whiz, how can that be? You just creeped us the hell out with some of the things that can be going wrong. Yeah, write this Whizism down. You should have a couple written down. Here's another one. When volatility is cheap, you buy it. When volatility is expensive, you sell it. You ever see a 9, a 10, or an 11, or a 12 in front of this decimal point, you got to get long volatility, period. Okay? The VIX down here at 11 is stupid cheap. I'm sitting down here in Fort Lauderdale, Florida. Of course, my screen's freezing up, my trading screen, because there's shockwave ads that freeze this damn platform up. Just listen to me for a second. South Florida, beautiful day out. Today's the day you go buy hurricane insurance. You do not buy hurricane insurance when it is on Channel 5 that there's a tropical depression over the Bahamas. it's a little late. You can go get it at Fred's Hurricane Insurance down the block, and it's going to cost you your firstborn. It's too late. Okay? So when vol is cheap, you get long. You buy it right now. All right, 1 second here. Let me see if I can jiggle my computer from being frozen here. Renee, just want to check that you can still hear me, okay? And you guys can still see me. Can you guys hear me?
Yeah, I can still hear and see you.
Okay, good. It's I'm a little frozen right now. Just it tends to come back. Not me personally, my computer. So volatility, folks. Right now, I would be looking at a VXX bullish double vertical. Well, out to what expiration, Whiz? I don't know, man. Pick a month. It seems like in a week. Look at what happened with the immigration thing. Monday, we freaked the hell out, and volatility spikes, and then it does what? Once an event happens, it's over, okay? Once, volatility goes up on uncertainty, right? But once something is certain or kind of known, volatility goes down. Okay, so we're going to have a lot of these days, I guarantee you, under the Trump administration where the market freaks the hell out. The market could still be up. Remember, folks, volatility can go up on good news. Let's write this wizism down, and I have a couple of them. Market up, VIX up, something is up. Okay, market up, VIX up, something is up. Let me give you a perfect example. Okay, I'm trying to hit Control-Alt-Delete here to unfreeze my screen. May, if you guys have your trading screen handy, do me a favor and pull up May of 2013, May, June of 2013. Go back that far. Okay, do that. Do me a favor since I'm trying to unfreeze my trading platform here. May, June of 2013. Look at the VIX. Pull up a chart of the VIX, since I can't. Pull up a chart of the VIX and go back to 2013. The VIX in May, June went from 11, 12. It doubled to 24. Okay, it doubled to 24. Let me ask you, and this is an excuse for me to have a sip of coffee. I want you guys to tell me, with the VIX doubling from 12 to 24 in the span of a couple weeks, was the market going up or down? And I want an answer in the chat box. Okay, was the market going up or down with the VIX doubling from 12 to 24? Down, down, neutral, I don't know, down. Okay, so the VIX went from 12 to 24. What did you think the market was doing? I got an up, down, mostly downs. Ladies and gentlemen, are you ready for this? In May to June of 2013, the market was going up. Now, for all the 1,000 heads that just exploded, let me explain why. Whenever you see the word VIX or volatility, delete it, cut paste the word uncertainty. I'll give you a little history lesson. Back in May, June of 2013, what was going on? Ben Bernanke was talking so much about potentially, everybody ready for this word? Taper. Everybody remember the taper? He was going to start potentially in this meeting deciding to throttling back the $85 billion of hopium that he was throwing into this market. I remember that, Whiz. So going into that Fed meeting, it was a storm's coming. He might take away our hopium. We need to hedge and get long vol. He came out to the microphone. I was giving a speech. I remember where I was because we stopped. I was speaking to Bank of America Merrill Lynch financial advisors out in the Four Seasons in San Francisco. And we stopped for the Fed announcement. And as soon as Ben said, no, the VIX went from 24 to about 11 or 10. It smashed. You ever hear that? The volatility smash. I had trades going into that, bullish, and I had trades to roll inverted and get bearish. So volatility can spike even if the market's going up. Trump could say something crazy right now and the VIX spike, but the market still be having a rip your face off rally. Okay, very, very important lesson about volatility. So here we go, Goldman Sachs. I'm going to do a long call diagonal with a protective put. If you've never heard about this tactic, it's going to be awesome. I gave you my strategic mindset, step one in my trade plan of Goldman Sachs. Couldn't be more bullish on the financials, man. Recommended it in September, October, November, December, right here, and right here. Recommended on the earnings pullback. Goldman Sachs is doing this, period. The target is Goldman Sachs. Here's how we're going to trade it. I'm literally going to hop in my Hornet, my time machine, and I'm going to fly as fast as I can, speed of light, and we're going to go out to January of 2019. Why? I want as long as possible for this trade to work. By Jan 19, if Goldman Sachs isn't a $500 stock, something has gone horribly wrong. I collapsed the puts on the right side of the screen because I wanted to open up the calls because I wanted to open them up to a Greek called delta, okay? And the delta I want to select is a deep in the money call with at least a 0.8 delta. And you know what? This is great because my existing position that I put on, 3 contracts, I already have the trade. It's this one. So this is great. Man, I really planned this out well. Let me go into Goldman Sachs here and show you this trade right here. This is the trade. This is awesome. This is the trade that I would put on today. So you ready for this? It's flat, essentially, down 500 bucks, which means you can get into it and be even. So let me click Analyze and open it up and show you the trade that I would do on Goldman Sachs today. I would buy 3 of the January 19 170 calls. Why? I just showed you. If you went went and looked at the 1 delta calls, that means if Goldman Sachs goes up $1, we go up $1. A 1 delta means a 1-for-1 move, right? A 0.5 delta call is at the money or out of the money, and it's cheaper. It's like a lottery ticket. 1 delta call, deep in the money, way expensive. So what's Whiz do? I split the difference between a 1 delta call and a 0.5 around 0.8. So these are the 0.8 delta calls that I'm buying. Why did I buy 3? Okay, Whiz, you told me one guy in your member service bought 20 and he's up about 20 grand today. Yeah, because he wanted to. My SOP, I have a trading SOP at Top Gun Options. As a portfolio manager, I don't want to risk more than $5,000 on any one trade. Why? That's me, man. If you're sitting there going, I don't want to risk $1,000 when trade, well, maybe then you trade 1 contract. Chuck, hey, Whiz, I don't want to risk more than 25 grand on any one trade. Well, then he does 20 contracts. So the number of contracts is based on my risk. So, well, Whiz, you're saying you don't want to ever risk more than, I didn't say ever, I don't want to risk more than 5 grand on any one trade. You're risking 7,200. Well, look at the probability for max loss, 0.0. I'm sure there's a 1 somewhere out here, but Goldman Sachs ain't going out of business, folks, for all the reasons I told you in my strategic mindset and my commit criteria. Now, I also bought 3 of the Jan 19 185 puts. The hell are those things? Folks, I call these disaster puts or protective puts. If I did not have these on, I would not have a ski jump right here. You see the ski jump? Right now, if I didn't have these puts on, Options House would be haircutting me. They'd be margining me as if Goldman Sachs is going to do what? Go to 0. And I guarantee you, if I got rid of these disaster puts, my max loss would be about $30,000 or 50 grand, something stupid. So one of the reasons to get disaster puts on is to reduce your haircut. And also another reason is what? Yeah, maybe that's what's going on with all this stuff. The other reason I have disaster puts is just in case there's a disaster. So where do I put them? A lot of use of the word put. I place my disaster puts about 20% below where the stock is trading right now. Where'd you get 20%? Well, I've heard that if the market pulls back 20%, they call it a bear market. You know, 20% is a good meaty number, okay? So I double the stock price. What's that, 48 bucks, and then I subtract 48 bucks from 240, and what do you get? Okay, what's that, the 192. So instead of the 185 puts, maybe you do the 192s, whatever. Now, The only thing I wouldn't do on this trade today is do this. Sell these, what do I have? Next Friday's 237.5 calls. I put these on, I think, the other day, and guess what? I didn't think today was going to be the day. Here's a perfect example. I didn't think today was going to be the day that Steve Mnuchin or the, everybody was going to say, hey, today Frankendodd goes away, and, a big headline in the Wall Street Journal about how financials are, the South will rise again type of, article. So if I was to do this trade today, don't do the 237.5 like I did. Write this down, and when you become a member, folks, this will all be slower. You'll have access for ages, and my live trade briefs are not this squeezed. If a stock is on a tear, actually, let me start with this right here. If a stock's kind of doing a gentle climb schedule like this, I tend to sell out of the money calls that are about 7.5 to 10% above the stock price. Okay? You can do the rough math, folks. 10% of that is 24. Okay, blah, blah. Now, if something's on a tear, this is a vertical climb. This is an F-18 Blue Angel straight up. I wouldn't sell any front month upside calls yet. So today, I just buy those deep in the money 80 delta calls and some disaster puts and hang out. If it keeps doing this, those 0.8 delta calls become 0.82, 0.87, 0.9, and eventually, just like Schoolhouse Rock on Saturday morning, how a bill becomes a law, they become 1 delta calls. So when it's doing something like this, get out of the way. There's no sense to try and step in front of here and collect a little coin each week by selling front month upside calls. Don't do it. Now, if Goldman Sachs kind of levels out here for a little bit, we'll get back into selling some calls. Okay. Now, if a stock is kind of flat, let's see where we were a little flatline-ish. Right here. So during this time period, I would sell a front month upside call or calls that is 2.5 to 5% out of the money. So we have a couple examples here of my front month call SOP. When it's flat or even going down, right? If we can make money selling front month upside calls, folks, if Goldman Sachs is going down. Your neighbor at the cocktail party tonight, I bought Goldman Sachs, is going down, I'm losing money a little bit. You can be like, I did the same thing and I'm making money. And they're going to all look at you like you're nuts. Be like, no, as the stock's going down, I just sell closer to at the money calls and ride it down a little bit. Okay? So these are all really good rules of thumb. Flat stock, sell the upside calls that are 2.5 to 5%. Gently climb schedule, stock or ETF, 7.5 to 10% out of the money. And then this move today, sit on your hands, sip on your coffee and go, let's just watch Goldman Sachs make money. Now, since I already had that trade on, I have it on, you can put this one on and we're going to fly formation together in the live trade briefs. I'll send out alerts. I'll manage this live, folks. I send out texts, I send out emails, and you get, if you can't attend the live trade brief, you can watch the replay, and just like you watch the replay on this. So now I'm going to be nice, since I already had that trade on. I forgot that was the exact Goldman Sachs trade I on, which is awesome for you guys. Now you're going to get 2. I sent out an alert this morning on the XLK, the tech sector ETF. With the tech earnings today, guys, it's time. The XLK is the tech sector ETF. Whiz, I thought you liked Facebook, Apple, and Amazon. I do, and I have individual positions in those. But there's also single stock risk, folks, when you're talking about single stocks. Mark Zuckerberg, can't stand the guy. Obviously politically, mostly for me. Tim Cook wakes up tomorrow, breaking news, Tim Cook's on an airplane to Cancun with all the money from Apple, to all $250 billion. Stock goes to 0. You have single stock risk. That's a little out there. You know what I mean. Samsung sues Apple because it developed the iPhone, and we have the evidence to prove it. Stock's down. A basket of stocks in an ETF is a little safer, in my opinion. So that's why I sent out the alert today on the XLF. So let me copy this trade and show you this one. Strategic mindset. I'm bullish on tech all the way out to January of 2019. Target, the XLK, the basket of ETF stocks. Commit criteria. I just kind of gave it to you. I'm long-term bullish on tech stocks. Facebook with their video ads, they haven't even monetized Instagram yet, folks. That thing is a gold mine. They haven't even tapped yet. Apple, strong iPhone growth. I don't think we're having a trade war with China. I think the iPhone grows even more. Amazon, I gave you my strategic mindset. So there's your commit criteria. The tactic, again, is a long call diagonal with a protective put. I went out as far in time as I could and bought 10 of the XLK Jan 1939 calls. These are the deep in the money 80 delta calls. Okay. Now, as a disaster put, I'm buying 10 of the Jan 1940 puts. And again, without this disaster put, and I filmed a video and sent this out to my traders, without this protective put, I always do it. I do the trade without the protective put, and I scare the hell out of people because I do it. This risk this morning was $14,000. And Whiz, I don't want to risk 14 grand on this trade. Neither do I. So when I bought this, I go back a couple screens and I buy the disaster puts, and what happens? Whew, it's not. I'm not a sorcerer, folks. It's options magic, right? When I bought a disaster put, I told Options House, I'm like, hey man, the XLK ain't going to zero, and even if it does, I got puts at 40. So they go, all right, Whiz, here's that 10 grand in margin back. Go deploy that somewhere else. So now you can really see the power of a disaster put. It was like $13,500 in risk. I'm just rounding up to 14. So now I'm actually below my SOP of not wanting to risk more than 5 grand on any one trade. And again, for those of you who are like, I can't trade with Whiz. His max risk per trade is 5 grand. That's me, man. You got to fly and fight your own airplane. I can't give you financial advice. I'm not an RIA. When you register for TGO in a couple minutes, you get to look over my shoulder and eavesdrop and watch. It's like you're standing on the floor of the SIBO looking over my shoulder and go, what's Whiz doing? What do you do on the other side of your computer in your bunny slippers? I don't care. You should be paper trading, first of all, before you ever put any real capital at risk. And then I sold next Friday's 52 calls, okay? Selling some up front month upside calls to bring in, I think it was maybe $500, folks. You can, yep, right there. I put them right up there. This is a perfect example of a nice 2.5 to 5% sell those out of the money calls and bring in like $500 between now and next Friday. What's 500 times 52 weeks a year? We're not going to make $500 every week or whatever, but ballpark. As you can see, we can do that tactic each and every week, selling front month upside calls, bring in some scratch as the underlying is going up. That's why I love that tactic, man. Underlying's going up, we're making money. We're selling front month calls, we're also making money. That's why we have a position like this I showed you at the beginning in JP Morgan that's up $24,000 in 8 months, 7 or 8 months. I forget exactly when I put it on, but that's ballpark, okay? And then this one that's a couple months old, that's up $4,800. The Goldman Sachs trade that I showed you, that's up $7,200 in a month and a half. Love, love, love this tactic. Okay, now, and okay, got some questions. What was the put you bought? Which put? And then I'll go back to it. And then let me get in here real quick. Okay, you got it. All right, so folks, here's what I want to do. Great questions. Let me, and for the 8 folks that just said, how do I get on board here? Just go to topgunoptions.com. It's easy. Scroll down to kind of for the skiers in you, this will look familiar. And you can take a 2-week test flight into our services. The beginner 2-week test flight goes into our accelerated retirement portfolio. That's my embarrassing portfolio, right? It was only up 101% on risk in 2016. So if a little bit more conservative, slow and steady wins the race, you get access to the Accelerated Retirement live trade brief every Wednesday at 1 o'clock. And I'll throw in the primary workbook today. It's $14, man, for about a 2-week value of $1 grand. Okay, it's a 2-week test flight for $14, and I think it rebuilds, yeah, at $125. Now, all right, Whiz, it's not my speed, man. I like a little bit more airspeed on my airplane when I'm trading airplanes. Try the intermediate test flight. You're going to get access to the primary live trade brief, which is every Tuesday, and I'll throw in our urgent alert service, which is this portfolio. That's got the JP Morgan trade. It's got the XLK trade I just put on. It's got a bunch of China positions. It's got a Disney trade that's up $3,800. You'll get access to that urgent alert portfolio for 2 weeks. I'll throw in a couple manuals as well. The intermediate workbook, primary workbook, and OPCL. This one's $28. 2-week trial, okay? And then finally, Whiz, you talked about an SPX bull put spread that made $1,600 since Tuesday. Yeah, I did. That's in our weekly options live trade brief. That meets every Monday at 1 o'clock for about a half an hour, and I put on 1 to 3 weekly options trades. And you also get access to the PLTV. This is the best value. It's $38. Folks, that's a that's not even a bottle of bad Pinot Grigio tonight on a Friday night, and it's worth about $4,900 when you stack that together, and then it rebuilds at $295 a month. So if you don't see the value in it, if you can't understand that getting something worth this for that is a good trade, don't sign up, because you're going to frustrate me as your instructor. You don't have the aptitude, and that's not, I'm not being offensive, I'm being honest. Locked in late, missed a JP Morgan trade. You bet. Well, the JP Morgan trade's already airborne. If you logged in late, I just did a Goldman Sachs long call diagonal with a protective put that I would put on today, that I would absolutely get airborne and put on today. And I can go back and show you guys that. So topgunoptions.com, and then just scroll down to the middle of the page. Hey, what type of trader are you? Oh, Whiz, more conservative, beginner. Intermediate. I like weekly options, and I like the primary live trade brief. Click on the advanced, okay? $14, $28, $38 is a joke, in my opinion. PC, hold on. Let me pull up the primary model portfolio. Folks, I trade with Options House. You can trade with whoever you want to trade. Gorilla Trade, Scott Trade, E-Trade, Mama Trade. I don't care. I just use Options House because I helped build it when I was in Chicago running the Options News Network. Let me go to the primary model portfolio, and I'll show you the Goldman Sachs trade again for those of you. And remember, you got a little camera up there, and you can take a screenshot of this Goldman Sachs trade. I strongly recommend you do it, or I strongly recommend you grab a 2-week test flight, and you can get it on your own on our member page. Okay. I also just, you know what? Let me share with you the XLK trade video. Man, that's pretty nice, you Whiz. And my marketing people hate when I do these things. They're like, you give away too much stuff. And I kind of agree with them. But folks, I hated Wall Street, man. I'm a military guy. I felt like I needed to take a shower every time throughout the day repeatedly. They're gross. They step over their own mother to make a buck. Military guy, you put the ladder down, man, behind you, and you help people up. I did great. And now Chicago sucks. No offense to anybody that lives there. Hated the winters. I'm down here in Fort Lauderdale on the beach trading and helping people like you guys. Let me share with you this. This is the Urgent Alert XLK long call diagonal with a protective put that I sent out to my traders. So you're gonna get this is you got 3 trades, man. So here we go. Let me give it to you guys right here. Paste, send to all. Tom, great presentation. Got a jet, though. I got that. We'll check out the site for sure. Thanks. You're welcome, Tom. Fair winds and following seas. Steve, yes, the $38 trial is for 2 weeks. It rebills at $295, which is cheap in my opinion. We charge $2,995 for that service annually. So if you're more interested in an annual subscription, I mean, I wasn't, this is more of a, hey, get to know me type of webinar. But if there's people who are interested in our annual services, hey man, don't let me stop you. I'll give you that link, Steve, if you are more interested in an annual price. Okay. What should we be seeing during Matt's presentation? I only see him on a webcam. Is that what we should see? No, Keith, you should see a trading, or not a trading screen. You should see a membership page right now. I hope you guys haven't been looking at my face the whole time, because that is an absolute waste of time, and it's not that good. Let me ask the folks that are in here. Has everybody else been able to see my trading screens and everything like that? Because that would bum me out. Hold on, let me make sure. Oh, okay, good. Yes. Lowry, if your call works, when do you close the protective put? 50% loss, Lowry, I never do. Okay, good, everybody can see it. Larry, I never close a protective put, ever. I mean, you can, But why would you? Larry, remember, one of the reasons you put the protective put on is not just in case there's a disaster, it's for margin requirements. I don't get into margin at all, folks, because write down these two words, portfolio margining, and Google it and figure it out. Everybody's got different margin requirements, folks, but if you get rid of that disaster put, because it's, quote, losing money, your haircut will go through the roof. And your broker will be like, yeah, it's great, you just got rid of that disaster put, now you need an extra 10 grand in your account. Don't. For me, Larry, a disaster put is set it and forget it. It's like the Ronco, oven or something like that. Okay. All right, folks, I'll tell you what. Hey, I apologize for having to, quote, prematurely eject out of here with my blue screen of death. But all you need to do is go to our homepage, topgunoptions.com. Go down to the ski slope looking stuff. If you're not a skier, well, beginner, intermediate, advanced is how they break out the trails when you're skiing. 2-week test flights into what we do here, whether it's accelerated retirement, the front months and the back months with some hedges, or weekly options. We have everything for you. Whether you want to fly an F-18 or Whiz, I'm over here in a Cessna, just give us a shot, okay? And if anything, remember that 7-step trade plan, and make sure you hedge, folks.